You are now listening to the Supply Chain Secrets Podcast with Brian Most and Don Davis.
Hi, everybody. This is Don Davis. I'm one of the co-hosts here of Supply Chain Secrets. And, we had a recommendation that for our listeners, we should break down the episode and talk. I mean, I personally can't believe anyone would fast forward through an episode, but there might be people out there that want to. So we thought it'd be a good idea just to give a run through of the topics we talk about at the top of this episode. So if there's something you're really passionate about and you want to hear about it, then you can fast forward to that. But I'm sure most people are just going to listen to the whole episode and really love it. So the topics we covered today is we really started to talk a little bit about the carrier results, and Maersk has just released their results. So we talk about the impacts of that, and we weave in and out of that through the episode. But we start at the top there, and then we go into talking about multi-year contracting strategies, because that's something specifically Maersk talked about. They're not alone. There's others, but if you want to hear about what they're seeing and what they're saying about it, that'll be the next topic. Talk a little bit about BCOs and MVOs, and is it really the same for them? How you can leverage MVOs, and then we talk about the future outlook, like what are impacts that are out there, the environment, labor, and how does that impact your contracting strategy? Because there's a lot of our discussion in this episode around the contracting strategy in and of itself, and there's a lot of things that we try and give you some perspective on when you're thinking about that, particularly in this contract cycle. So that's really it for the episode. Hope you guys like it, and like I said, give us feedback on this new format and tell us what you think. If you like it better, if you like the old way better, we're resilient. And we try and accommodate our audience. So you have the power to tell us how to proceed. So thanks everybody, and hope you like the show.
Well, hi everybody. I'm Brian Most, SVP of Retail Strategy at NYSHEX and former VP of Supply Chain at Walmart.
And I'm Don Davis. I'm the Senior Vice President of Carrier Strategy here at NYSHEX and former executive of Hapag-Lloyd and CMA CGM.
And we're back again with our podcast, Supply Chain Secrets. Hope everybody's doing well out there, and it's great to talk to you again. I really want to thank our listeners. Don and I love getting feedback on the podcast, and believe it or not, your input helps us inform what we talk about on future episodes. And so we're so excited that you're participating and sharing feedback and help us shape the content. We're also really humbled and excited to hear that some of you are actually using our content to share with your teams or even your senior executives. And I'm telling you, Don and I couldn't be more excited, because we started this podcast just to inform and try and educate and bring stakeholders together in a collaborative way. So one of the things that we've been asked to do is to also create like a one-page summary, a blog post of the actual episode itself that would accompany the full recording. That way you can send it easily to other members of your team or executives. That way, if they want to go listen to the full podcast, they can. Or if they just want to skim the summary, they can. But we're going to be implementing the changes that we hear from you, and we're excited to do it. So, Don, who would have ever thought that anyone would have wanted to listen to some of the things we had to say? But it's been pretty exciting so far.
Yeah, it's been really cool, and it's really great to have some feedback and something that we can implement, because I think we started on this journey just, as you say, trying to inform people, but having people say like, hey, we think this is good, but it'd be really great if you could add this or do that. I think it's really terrific, and it's helped us, I think, innovate and try to put something together that our listeners can enjoy and share with other people. So thanks again for that.
Awesome. Well, hey, look, John, you and I keep getting the same questions about, what is going on in this market. We've talked about this on a couple of prior podcasts, but since people want the most up-to-date information on what's happening in the market, what does it look like for contracting season? What are people talking about with the labor situation? Look, I think that's where we start, because people want to hear what's happening, what's the most up-to-date information, and whatever insights we can share in terms of talking about it.
Yeah, and I think it's an interesting time of the year because the carriers are starting to come out with their third quarter results, which of course are record-breaking. You can see that the impact of what's happened with the rates and their high utilizations and head hauls. So I think that's terrific. But I think there's some other pieces of the story which are interesting. I think there are some things you can unpeel if you look at the Maersk results, as far as, some signaling on what their strategy is and how they're planning on looking at their overall capacity, et cetera. So I think there's some things you can find there which point to the future and can help people develop a strategy around how should I contract in this next cycle.
Well, and I think it's great that we started there, because one of these big questions has been, okay, so the carriers are profitable. What are they going to do, right, with the money? Obviously, we've seen some ship orders be placed. We've seen some acquisitions happen. I'm sure there's going to be investment in systems and process and people. But what's your perspective when you see how some of them are starting to invest some of those profits?
Yeah, well, I think it's first of all, it's great for the industry to see carriers making money. I think for a long time, carriers were very cost focused simply because the margins were so low and their costs were so high. You look at the cost of obtaining a ship, the cost of container fleets, cost of fuel, and it was just very expensive business to run. It's very asset heavy. So you combine that with rates that weren't really increasing by very much year on year, and it just made it very difficult. So carriers for a long time have been very cost sensitive. Now that that's changed, I think you're going to see a few different types of strategies be implemented, but one where I think it's going to be better for the industry, because I think one of those things that has been lagging is technology. I've heard more than one person say, container shipping is still in the Stone Age. I think that you're really starting to see that change, and change pretty quickly. And now that carriers have some strength of their balance sheet, they're going to reinvest in their business and try and deliver things through technology, but also look at different types of service offerings that they can have in the future.
Yeah. Well, and I think the ultimate hope from a shipper perspective is that some of that's going to be invested in, getting back to reliable operations. There are certainly things that are out of the carrier's control, and I think a lot of people understand that this isn't something that can be fixed by one party of the supply chain. But I think longer term, once we work through the bubble of inventory and some of the congestion issues and what have you, that somehow, some way, there's going to be something that gets invested in reliable operations, so people can kind of get back to planning their supply chains and operating without everything being an exception.
Yeah, and I think all the money in the world isn't going to solve the problem in LA. When you have 70 ships out there waiting to berth, it's really not a money issue that's going to help solve that. So I think there has to be some stability in the industry, that there's got to be sort of this catching up, and that has to do with the amount of ordering you see there, and inventories need to catch up. And so I think there's certain things that need to happen before you're going to see some of this congestion slow down and some of these ships start to operate on a more regular schedule. So I think it's going to take some time, because we know there's still a backlog and we know there's congestion in the ports. And those two things don't really point to things getting solved very quickly. But I think it's important to acknowledge that this is happening, because I think what it does point to is that you're looking at the next year really being strong, because I think there's still some debate on when things will change and the market will change. And if you purely look at it from 2022 perspective, I think you're going to see a very similar market condition than in 2021.
Well, and maybe that's where we head with the discussion at this point, because a lot of the shippers that I'm talking to are wondering just how the carriers are going to approach, not only the next year, but the next several years, because as you said, the carriers now are profitable. There is a bit of stability in the balance sheet, and maybe that means they interact with customers differently. And I think we're starting to see that. Certainly, the idea of doing longer term agreements has always been out there, and I know that some shippers and carriers have explored that. Some maybe have used them in a strategic way, but I wouldn't say there's been broad adoption. But it sounds to me like a lot of the carrier shipper discussions that are happening earlier about how do we take some risk out of this for both of us, and how do we think about longer term kind of strategically partnering on our business.
Yeah. And I think that, I mentioned the Maersk result, which was terrific for the third quarter, around about $6 billion EBIT for that third quarter. But within there, that they were talking a little bit about how 64% of their long haul volume is now multi-year. And that's an increase from 50% the year prior. So it's a fairly significant piece of their business. And so you can see that that's part of their strategy, is to look at multi-year. And you also see that Maersk, on their overall capacity, when they start talking about their roadmap for 2025, that they're not planning on expanding beyond their current capacity, which is somewhere between the 4 and 4.2 million TEUs. So what does that tell you? Well, that tells you a little bit that, at least one carrier is not looking at expanding rapidly as far as what they're able to offer in capacity, but also that they're trying to settle in and focus on some multi-year contracts. And I don't think they're alone in that. But this is something that was part of their announcement on their third quarter results. And I think you see some carriers doing the same thing. So you can see that there's a value in, from a carrier perspective, taking a more long-term approach. And this is something we've talked about on prior episodes, Brian, is how do you become a customer of choice? Well, I think it's really taking some of that annual negotiation out of the discussion and saying, hey, I'm going to commit my business to you long term so we can start to talk about other things other than price. And we can talk about service delivery or how can we improve upon the performance of the carrier or the shipper, but not make it a cost or price discussion all the time.
Yeah, and I think that there's a group of shippers that are out there and they're ready to have that discussion. In fact, again, we know they're having those discussions. There's been deals that have been concluded already over multiple years, but I think it just takes a certain approach, right? There, as a shipper, you've heard me talk about, like, you need to know what your priorities are. What are your priorities going into, this next cycle? And then you can start to talk about the structural and the fundamental issues out there about, is it good or is it bad to look at long term? But if it's less about, did I get the best price? If I'm not optimizing on pure price all the time, and it's this blend of, yes, cost is important, but to your point, service reliability, diversification, risk management, bringing some degree of predictability in over a longer period of time, those are the discussions you can have. If those are your priorities, it's less about, do I win or lose in year 1 or 2 of the deal? And it's more about, can I achieve my priorities or my strategic goals over a longer period of time with the security of a longer term agreement?
Yeah, I totally agree. If someone's going to look at this and say, well, I signed up for a multi-year and I lost because there was an opportunity for me to take advantage of a lower price point, then you probably don't want to get in a multi-year agreement, because I think carriers could also say at the same time, hey, there's a pretty significant opportunity for them to charge extremely high rates and make a lot of money. But of course, they're settling in at rates that are higher than we've seen in the past, that's for sure. But they're not saying, it's got to be 20 or 25,000. Some of these crazy numbers, at least crazy to me, numbers that I've heard out there, they're actually, I think, fairly reasonable, given that there's a certain rate level that's available, and they're settling in somewhere that is, I think, fairly competitive given what you're seeing out there, and then this stabilizes your supply chain.
Well, and I think you have to look at it as a shipper as it's an investment in those things that are priorities to me, right? So sure, maybe I pay a little bit more for some of the guarantees or some of the expectations around capacity, commitments and certain strings that I want to be on, or I want to get to a certain terminal, or I want a certain port. All those things are really obviously important to the long-term strategic value of your program. And you look at it as an investment in price to do that. And if you're looking at that end-to-end total supply chain cost, we've talked about this before too. You could save a couple $100 on the ocean freight rate and pay $2,000 more in the truck or the intermodal, or people standing around waiting at the warehouse because the freight, the container didn't arrive. I mean, there's a whole host of other issues that just multiply the expenditure if you're not investing in some of that predictability.
Yeah. And I think that it, makes sense. I think everyone, I'm from the shipper side, has to make that assessment of, what creates value for them and what are the value drivers. Is it price? Is it reliability? But I think that there's opportunity in this market to do both, that you can go more shorter term and long term. And Brian, since you're one of the smartest people I know, I want to ask your question and get your thoughts around this, because I think for shippers, this is probably going to be pretty interesting. And the what I hear from the carrier side is that there's a portion of the carriers that are saying, okay, I want to be strategic. I want to be long-term, multi-year, talking about two-way commitments. And there's definitely a drive in that direction. And then there's other carriers who are out there who are like, well, I'm not thinking in that direction. I'm thinking more short-term being a year or less. I'm thinking that the market condition is super strong. And, I'm going to take advantage of that. And I'm going to play in that space and not tie things up for such a long term. So given that there's like two different schools of thought, I mean, if you're a shipper in this market, how do you approach that with carriers thinking in two different ways?
Yeah. Hey, look, I'd love to be one of the smartest guys, but the reality is I just try and surround myself with smart people to help advise me. And my approach, to be quite honest with you, is just like I kind of approach my financial investments. I have a financial advisor and I have a portfolio that I invest in, right? And across that portfolio, some of it's short term, some of it's long term, some of it's stable, and some of it's risky, right? And what I figure out as that investor is what amount of risk am I willing to take? How much diversification do I want? And over what period of time am I looking to generate a return? And so to me, I would do the same thing when in my previous roles, when I had a group of carriers that I used as strategic partners. There were some that absolutely wanted to invest the time and effort to get into forecasting and planning, and not only me be a customer of choice, but then be a provider or a service provider of choice. But that takes a lot of effort. It takes a lot of work, and it takes alignment all the way to the head office to make that happen. And look, the reality is not all carriers are going to be motivated by that, and not all shippers are going to be motivated by that approach. But if I could find one or two carriers that are willing to kind of go down that path with me, I'm going to focus the majority of my business or my longer term business probably in that area. And then here's the thing. I don't think any good financial advisor would ever say put 100% of your assets in one particular instrument. So this is the same thing. I'm going to put a percentage in my longer term agreements. I'm going to put a percentage in the shorter term agreements, especially with those carriers that want to operate in that space. And again, hopefully it blends out to a return that helps me achieve my goals that I talked about earlier, which is probably a blend of cost, service, and predictability or reliability. And so that's probably how I would approach it if I was still in this market where I was having to buy ocean freight.
Yeah, I think that makes a ton of sense. I think it's probably worth noting for our listeners. I think this conversation is a little different if you're a BCO or an NVO, because I think that there's some priority around BCOs, and typically BCOs sign first. And even though we're in like a different type of cycle in that you see contracts being signed here for next year, where normally that really wouldn't start until, let's say, January, February, you're still seeing BCO signing first. And it's not to say that an NVO hasn't signed a longer term contract or signed something now, but you see a little bit less of that, and you see it more on the BCO side. So I think it's worth noting that it's not the same based on who you are. But if you're a BCO, it appears that there's more flexibility to be diversified, and you're going to have a first crack at this.
Yeah, no, I think that makes total sense. And the other part of it, Don, is just this idea of unknowns and risk, and how do you manage that down to something that you feel comfortable with? Once you know what your priorities are, how do you start to take some of the unknowns out and start to make some probability bets on which way things are going to go? And maybe that makes you feel more comfortable with some of your decisions. And so I ask you, right, when you think about the structural, fundamentals of the business, has anything really changed materially in either supply and demand over the next couple of years, like the congestion issues, any regulation? Like, what would you be thinking about if you're trying to say, okay, if I tried to project out what's going to happen in the marketplace based on what I know now, what would you say?
Yeah, I think that's such an interesting question. I think the first strategy for me as a carrier is that, they're struggling with just fall down. I mean, I think that's one of the things, like say what you want about utilization and demand of freight rates. There's still an issue with these fall downs, and that you see in order to carry. I love the Rolf Haben Jensen statement that he made earlier this year, which was, I have to book 400,000 TEUs to carry 240,000 TEUs globally. And for me, that's really top of mind because it's so inefficient. And you think about these equipment demands and trying to plan your assets. And it's just so difficult when you don't know what these things, where they're coming from. And if you can't look at a ship and see what's booked and understand where cargo is going to be coming from, because there's a certain percentage of it that's not going to show up, it's just very difficult to manage. So I would say the first thing is, the more I can solve that problem today, and given that the market condition means that shippers are demanding more space and they want more capacity, then I, as a carrier, I'm going to say, well, I really want to make sure that if we're contracting for 10,000 TEUs, it's 10,000 TEUs. It's not you contracting for 15,000 TEUs, hoping you're going to get 10. And, part of it is driven, I think carriers would admit that they haven't been able to accommodate 100% of their MQC. Is it all the carrier's fault? I'm not so sure about that. But at the end of the day, you see this behavior that somebody's contracting for more, hoping they're going to land somewhere where they're expecting to versus saying, hey, it's clear up front. So I think that's one thing that's top of mind for me that I'd be thinking of as a carrier. One other thing that I think is just kind of the thing hanging out there looming over the carriers is some of the environmental regulation. And I think that, look, there's no question it's important. And I found this to be interesting, that if you look at the emissions from the shipping sector, it's around about 2% of global emissions. And that would rank, if you consolidated that and ranked it against a country, it'd be the sixth largest in terms of pollution, and just in front of Germany. So it gives you some perspective that this is pretty sizable actually in terms of producing emissions. So I think it's important to understand that there needs to be something done about this. So there's no question there. And I think the industry has said, points to 2050, they want to be carbon neutral. That's a target for them. But there's these regulations coming in, and the first wave is in 2023. And these are regulations that were agreed back in 2018. And there's been time to get ready to be compliant with these. But I think the reality is every ship that's available is on the water, right? Because there's so much demand that you see some of these older ships that are out there, and they're not going to be compliant in 2023 with the new regulations. So given that's happening, then what are you going to do about that? And if you look at the current market condition, and if you say, well, that's going to stay true in 2022, even though there's new capacity coming online in 2023, does that mean that it's going to be this explosion of supply and things are going to loosen up? I'm not so sure, and I'm not going to try and be Nostradamus here and predict the future, but I think there's things you can point to that are top of mind, which might give you some pause to say that, well, things aren't just going to materially change in 2023.
Yeah. Okay. Well, it makes sense to me. And again, look, I know people are going to try and figure out, which of these years, could something change if I do a multi-year agreement, even if I'm looking over the longer term. I think it's unavoidable to try and figure out how that works itself out. But I'm with you. We know exactly what supply, at least what we think it's going to look like. There's no reason to expect demand to drop off anytime soon. Sales are projected to be record for the holidays, and I'm not sure that anything, to your point, materially changes. And even if there is a slowing of sales, there's a tremendous amount of restocking that needs to be done. We know inventories continue to be low, and so there's probably a backlog of who knows how many months of replenishing stock. We've talked about some of the looming labor concerns. It's hard enough to predict the market, let alone what a labor negotiation is going to turn out to be. But the signs are there. We know automation and technology has always been a key issue. And it's clear that something's not working right now in LA Long Beach because of the number of ships that are there and the number of days that it's taking to get freight through. And again, not blaming anybody, but just to say that those are issues that are going to be really difficult to work through, because carriers, of course, are going to be pushing for one thing, and I'm sure the labor groups are going to be pushing for another. And so it may not go smooth. And then the year after that, I think everybody's focused on the West Coast, but then you kind of got the East Coast and the Gulf right after that. And typically, yes, maybe they've been viewed as a bit more business friendly, but if a benchmark is set with the West Coast negotiations, then I don't know, maybe that makes it more difficult for the East Coast and Gulf. But the point being is there are enough unknowns out there, to your point, with regulation, labor discussions, and the general economy, that this is where I think you take a portion of your business and just say, it's going to be my insurance policy. I don't know how all this works out, but I do know there's some things I can control. And that's a portion of my business, whether it's my most regular business, whether it's my most important business to my customers, it's my most profitable business. However you define that as a priority, that's probably where I'm focused. I'm going to de-risk, and then, I'll leave a bit out there to play with, depending upon how the market goes. But I just can't see anybody going through the last couple of years not trying to figure out a way to de-risk their supply chain.
Yeah, and I think it makes a ton of sense to diversify as you're talking about. And, I've never had the pleasure of negotiating with an ocean carrier. I've always been on that side. But if you think about it in those terms that you're negotiating with the carriers, do you look at it and say, what we're talking about earlier, that there's these two different strategies, that there's this seems to be this multi-year strategy, and there also seems to be more of a shorter term, a year or less type of strategy. So what is your vetting process? Do you try and identify, what carriers are interested in, and then say, okay, over here I have these carriers in this bucket, and I'm going to try and do that stability, multi-year committed type of deal. And then you have these other carriers over here, which are like, okay, I have some relationships there. I'm going to then look at that diversification strategy and say, take those guys and look at like maybe a year, maybe even shorter term, 6 months at a time. Is that how you'd approach it?
Yeah, I think so. I mean, it'll be clear through your discussions with your carrier partners, what their approach is going to be over the next 12 to 24 months. And as you said, those that are interested in securing something over a longer period of time, certainly that's where my discussions are going to start, because that's going to be my anchor. When those agreements are signed, there's probably some commitments in there that I'm going to want to uphold as the shipper, and that I'm certainly going to want them to uphold as the carrier. And so I'm going to want to make that agreement, take that offline. That's my security, my insurance policy. And then I'm going to address the rest of my business that might be more shorter term in nature. And that's where I'm trying to get insights and information. It's really hard. There are different rate indexes and different companies out there that, some include surcharges, some don't, some are contract rates, some are true spot market rates. And so this is the challenge for shippers, of trying to get a sense for where those rates or that direction is, based on your business or your relationship or the spirit of your relationship with that carrier. And so you've got to try and find where that sweet spot is, at least where the indications are going to be. And then you just settle on something that you think is fair, that you can get what you need out of it from a volume commitment perspective and any type of service reliability. And then again, you're hoping to get that blended return at the end of the day.
Yeah, I think that makes sense. And I think that this is probably something that most shippers would want to start doing now if they haven't already, because I think a lot of the sense is that it's probably good to feel out how much capacity there could be in a multi-year, because I think the other side of this coin is, even though we said that there's carriers out there who are thinking more of a multi-year strategy, they're not thinking of 100% in a multi-year contract either. So that's going to be a percentage of their capacity. So how much is actually available? I mean, it's hard to say. I mean, that needle may move based on certain things that are happening, but I think that there is a cap. So you shouldn't just assume that, even though if this carrier, like Maersk as an example, has come out and said, 64% of their contracts are now multi-year, does that mean that they want to go up to 100%? I don't think so. So I think that if you look at other carriers, you have to think in those terms, which would then logically say that it may not always be available 2-3 months from now, given that there's probably some cap out there.
Yeah, my sense is, from talking to BCOs and, of course, watching the deals close on our exchanges, is that if you want to be in the contract discussion, whether it be a 12-month or longer, if you wait till after the new year to the traditional negotiating period in kind of January through March, you're probably going to be too late. It doesn't mean that there won't still be deals to had, but I think capacity is going to be limited. I think certain strings or certain port pairs will be limited. And I certainly think that there's no reason to believe that the rates wouldn't be higher than people securing now. So those, I think, are some of the factors I would consider if I was going to wait. But I certainly would advise anybody, if you want to secure a portion of your business in contracts, you need to be starting those discussions now.
Yeah, and I think the other thing is, if I were a shipper, again, never been on that side, I defer to you because you're the subject matter expert.
You should try it. You should try it, Don. It actually isn't too bad.
Well, I just defer to you. I believe in your expertise. But I think the challenge in this market is that if you want to grow, like, let's say I have this great new product out there and like everybody wants it, and I have these aspirations to grow, and this growth means I need to ship more. I think it must be troubling to think about this market condition and your ability to grow, given that, things seem to be pretty tight and it doesn't seem to be improving for the near future.
Yeah, and it's also hard to diversify. Look, if we're being completely honest, there aren't a lot of carriers that are entertaining, new customers or new business. So, for a shipper, hopefully you already have established relationships with some really good core carriers. And those are the discussions, obviously, you're starting with. Again, I'm not saying that there aren't carriers taking new customers because I'm sure there are. But I'm saying a lot of what we hear is that carriers are starting with their current customer base, and they want to protect that customer base and grow with that customer base first and foremost before they go to new business, which I personally appreciate that they're committed to their current customers. But I think at the same time, you just have to understand that's going to be a limiting factor in terms of the discussions and where things ultimately go. But again, my advice would be if you haven't started, you need to start now.
And what do you think about the idea where, okay, things are tough, carriers have different strategies, capacity is probably not going to come online next year, so it's going to be fairly limited what's available. But what do you think about NVOs as an outlet to grow? Because it sounds and it seems to me that they're participating pretty heavily in, let's call it, the spot market or the short-term market through these FAK types of contracts. And they definitely have capacity that's there. I mean, is that where you start to look to say, well, my carrier contracts here, this is all settled, but now if I want to grow, then maybe I need to look at the NVO market and see how I can use that to get that extra capacity.
I think it makes sense. Again, I think probably my best chance at future growth is probably through these longer term agreements where I'm making a commitment to the carrier, the carrier is making it back, where MQCs grow over the course of the agreement. So there's built in or guaranteed growth in terms of capacity, which is probably where I start. And then again, I work with my 1 year existing partners. Maybe I get a bit more MQC, maybe I don't. But then, of course, then I'm focused on fulfillment, right? Okay, we've committed to the same MQC as last year, but you only fulfilled it at 55% this year. I've really got to get that closer to 90+% because that feels like it's true growth to me. And then finally, yeah, I think NVOs are a great outlet, right? I think NVOs play an important role in the marketplace. I think they service, hard, to get to areas. I think they add a lot of value added services that some carriers can't offer. I think just as a shipper, you just need to be aware and, kind of eyes wide open of what comes with those relationships, typically shorter term in nature. Doesn't say, again, that there aren't longer term relationships that you can have, but there might be a bit more price volatility. And you might not always have a say as to which carrier or which terminal that maybe you're going to arrive at. But I absolutely think that MVOs have a place and can be used strategically by BCOs in this market.
Yeah, I think it makes sense as, we talk about, carriers in maybe two different camps as far as their outlook on contracting. It probably makes sense to start talking to MVOs and at least getting a sense of what they're seeing and thinking. And, are they looking to sign early? Are they looking to grow customers in a certain area? And because they have capacity that's available and they're certainly going to have some sense of what they're able to do. And I think you really can't rule anything out in this type of market condition. I mean, we've seen, shippers chartering their own ships. So, I mean, there's things we never thought we'd see before that we're seeing. So I think you really have to put it all out there and find out, who's thinking the same way you are, as far as if you're thinking more shorter term, or if you're thinking about growth, or if you're thinking about, incremental capacity. What are you exactly looking to try and do? And are these partners that you can build? And I would emphasize that I think when I say the word partner, it really has to be a partnership, that this is the time to really demonstrate that you want to be a partner. Because if it's transactional short term, I mean, you can try. My sense is that it's going to be extremely difficult to be transactional because there's just not any room to move. You can't really go from carrier to carrier or NVO to NVO because you're just limited on capacity.
Yeah. And again, let's be honest. I think that's why a lot of carriers are focusing on their core customer base. If you're just calling a carrier out of the blue and you haven't done business with them, or you told them, a couple of years ago you didn't want to do business with them, and now you're saying, hey, I want to be a strategic partner, it's probably going to be tough to get that conversation started. But I think you're right. I think the advice that you're giving and the approach that you outlined makes total sense. So if you ever did want to be a shipper, that might be a good way to do it.
Well, maybe I missed my calling, Brian. Maybe I should should have just been on that side my whole life. I don't know. Or maybe it was just spending like a ton of years on the carrier side that's given me this wisdom. Not quite sure. But anyway, I'm glad you agree with my strategy because, like I said, you're one of the smartest people I know.
Well, hey, look, the cool thing about us having these discussions is hopefully other people benefit from it. But look, I learn a ton each time we talk. So anyway, I think it was a great episode, and I'm sure we'll be addressing this topic numerous times over the next couple of months. But I thought it was a great discussion.
Yeah, me too. And thanks for the conversation, Brian. Thanks for sharing your thoughts. And for our listeners out there, don't forget, wherever you find our podcast, Apple, Spotify, rate us, review us, tell us what you think. Give us your feedback. You'll see Brian and I keep implementing things that you tell us. So keep sharing things and we'll keep improving. So thanks a lot, everybody.
Thanks for listening to the Supply Chain Secrets Podcast. Make sure to subscribe to the podcast on your favorite podcast network.